Welcome to Innsbruck, Michael.
Thanks for having me in Innsbruck. Happy to be there.
I can't give you softball questions, right? Now that you're on European ground. So let's maybe start with this. Do you ever think about your role being a risk for Bitcoin because you're so influential and so big, not only with your voice, but only with your holdings?
You know, I do think about it. I think anybody that believes in decentralization has to keep in mind their role. But I think that Satoshi set a really good example. And I think we've seen lots of Bitcoiners during the fork wars. You know, I think there were very strong voices in the Bitcoin community. And clearly, I think that the message here, or the idea, is everybody has to take their turn, and they have to drive the network forward, and they have to do what they can to contribute to the asset class. And there'll be a time when they'll step off of stage, and someone else is going to have to pick up and carry the torch forward. So, you know, I wouldn't be here if it weren't for the early cypherpunks, and I wouldn't be here if it weren't for all the heroic activity that took place during the block size wars. And I don't think I'd be here if it weren't for leadership at places like Fidelity, where, like, let's take Abigail Johnson, championed Bitcoin at Fidelity, and my first Bitcoin was purchased from Fidelity. I wouldn't be here if it weren't for people like Eric Weiss, who who orange pilled me. But my view of my role is we needed to integrate Bitcoin into the public markets, into institutional investors. So I couldn't do what they did, but what I could do is I could show that Bitcoin makes a good treasury asset for a public company. I could actually educate public investors and institutional investors. I could work through the legal issues, the accounting issues, the compliance issues that any corporation faces if they want to integrate into the system. And so that needed to be done. There'll come a time, I look forward to the point when I'm irrelevant, when there's 100 other companies that are bigger than me. When Apple Computer buys $25 billion of Bitcoin and Google buys 50 billion of Bitcoin, and then people don't remember MicroStrategy and we can't keep up anymore. And I'll be like that surfer that surfs the wave, and then the wave passes you and you just get back on the board and you paddle behind the wave and people don't notice you're there anymore. That'll be okay. I mean, I think, I expect Bitcoin to go on for hundreds, if not thousands of years. Each one of us has 2, 3, 5, 10 years we can contribute to it, and then you could get out of the way and let someone else carry the torch.
It's nice that you don't not only have a suggestion for Apple or Google to buy Bitcoin, but also have a sum in mind already. So my question would be, and I don't know if you know this, but there's officially what we know, there's more Bitcoin nodes running in Germany than anywhere else in the world. The German people are notoriously bad with inflation, and now inflation is picking up. The whole Bitcoin scene is just exploding. So my question would be, with your example, why is there no German, European company? Why is there no other American company who's just following it so far?
Well, first of all, I've been doing business in Germany for nearly 30 years. Germans are great engineers. And I love German minds and I love German engineering. And I think that Bitcoin, of course, is the first example of monetary engineering. So it wouldn't surprise me that Germans that study so much in the world of engineering, they're so fastidious in the way that they engineer their structures, their cars, their engines, their machines. They'll look at Bitcoin and they'll realize there's engineering beauty there. And so I think that's one of the reasons why there's a lot of passion for Bitcoin in Germany. With regard to companies, I think the key to keep in mind here is that at every single stage, Bitcoin needs something different. And starting in the second quarter of 2020 was the era of institutional adoption. And for an institution to adopt Bitcoin, they have to solve the issue of custody, because they have all of these legal restrictions about how they can custody the assets. And they have to solve the corporate governance issues. Like, for us to buy it, we have to figure out how to disclose it, and then how to manage our shareholder relations. It's a very intricate thing. And then there's an accounting issue. The accounting for Bitcoin was set by FASB when the largest holding of a publicly traded company was maybe $1 million. When we started looking to buy Bitcoin, we did a search, and we found that maybe one company had owned a couple of $1 million of Bitcoin once a few years ago, over stock or something. It was a trivial thing. So FASB set the accounting treatment to be the most conservative you could imagine, which is you can never write it up, you can only write it down, and you have to write it down to the lowest bid you can find from anybody anywhere in the world in the history of the ownership of the asset. So that's the same as if you bought something and you went to a party on Saturday night and you asked everybody in the party whether they would buy it from you, and someone told you they'd give you $1 for it. So you wrote it down to $1, and then you held it at $1 for the next 100 years. Okay, that is prejudicial, kind of hostile accounting. It's toxic for a public company with a GAAP statement, and so there's no reason for the accountants to take any other treatment, because they were just being extremely conservative. Now we're in a situation where there are billions and billions of dollars of Bitcoin on publicly traded balance sheets. And FASB has taken up the project, and there's massive interest in reforming that accounting. So I think that if you're a publicly traded company or a conservatively run company, and the majority of your enterprise value comes from selling cars or selling software or selling anything else, you can't reasonably hold a large amount of Bitcoin on your balance sheet, because the volatility of the accounting, it impairs the transparency of your P&L and your balance sheet, and therefore it's toxic to you as a public company. So a conservative CFO or CEO is not going to do it until you get to the point where you could adopt fair value accounting, where you could actually show the true value of the asset. So you might think that if you're a consumer, you might think, oh, the regulators don't matter. But there's a small number of people on a committee that set accounting standards for all these publicly traded companies, and they do matter. And to the extent that it is impossible to figure out how much the Bitcoin is worth, then that means that 10,000 entities with trillions and trillions of dollars will say, we're just going to wait. We're going to wait. And so I think that the reason, if you look at European companies, they're more conservative than American companies. The most aggressive entrepreneurs are like American private companies, like the Ubers or the Airbnbs, or fairly aggressive. And then sometimes publicly traded companies in America, if they're run by founders, they can take risks. But traditionally in Europe, it's businesses are more conservative. They go a bit. They wait for the American companies to take the risk in some cases, and they focus upon engineering. So I think that what will happen is the accounting will matter, and the accounting will be one element, and the other elements will be regulatory clarity from the SEC and the CFTC and Treasury. Though that will allow banks and publicly traded companies to start to handle the asset, then public investors will handle the asset. And then I think you'll see European companies look at that, and they will be emboldened by that, and they'll follow. But this entire process will probably unfold over a decade, from 2020 to 2030.
You just talked about the regulatory clarity, which is very important not only for the American side, of course, it's also important for the European. So basically, as long as the US is letting Bitcoin proliferate, as long as it's not getting any bans or any problems, nobody in the world can really do it, because the US has the deepest capital markets, the largest economy, etc. So could you give us your view of where do we stand? Ethereum just moved to proof of stake. It's basically open warfare out there between crypto and Bitcoin at this point. And the day that they move to proof of stake, Gary Gensler goes on the record saying, well, I thought it might be a security all along. So where do we stand there? And also one added question, are you involved with financing or helping Bitcoin-only lobbying in Washington? Because we know that lobbying is important.
Yeah, so with regard to the regulatory issues, first of all, I think that if you go back and you look at the classes Gensler taught at MIT in 2018, they're all on YouTube, and you can just Google Gensler blockchain and money and you'll see them all. I think he laid out clearly the theory of digital property and digital commodities and digital currency and all the issues. And what he pointed out was there are permissioned blockchains and there are permissionless blockchains. And of course, Satoshi's brilliance was figuring out how to transfer value and or manifest value without a trusted intermediary. And the idea is proof of work. But if you want to create a digital commodity, you have to create something without an issuer. You can't have a small group of people to control the protocol, because a group of people controlling the protocol creates an investment contract, and now you're making an investment of money relying on the efforts of others. So the idea here is you have to have a digital commodity without an issuer, and then you have to let it diffuse for a long enough period of time without any protocol, without any material change to the economics such that it seasons. Right. And so Bitcoin has this 12, 13-year history. And the fact that the monetary protocol was set, the fact that that it traded without value from January 3rd, 2009 till pizza day, 500 years without value, is an immaculate conception. That has never been reproduced. The fact that Satoshi never moved a coin is another important fact. The fact that it is proof of work is a third important fact. The fact that during the block size wars, right, the small blockers won is another important fact. The fact that you got an unvarnished string of soft forks as opposed to hard forks, those are all important facts. And so you put them all together, you've got one thing that's universally acknowledged as a digital commodity, Bitcoin. It's the only thing that's ever been universally acknowledged. It's the only non-controversial decision. Now you've got a bunch of other things that are interesting. The world has a big thirst for digital currency in the form of a stable USD coin. Like the world wants a Tether or a Circle coin. In fact, the world probably wants $10 trillion of it. And the world's only got about 150 billion right now. So there is a demand for that, but then there's a big debate about who can issue it, a bank, a company, a set of entrepreneurs, right? Who? And that will continue. I think that with regard to regulatory clarity, I think the theory was pretty clear in 2010, actually. The theory was pretty clear in 2015. If you want to create a commodity, it must have energy and it must be without an issuer. Okay, so if I take gold or oranges or oil or a bushel of grain, and if I remove 99.95% of the energy, you have an imaginary orange, imaginary oil, you have a security. If you remove the energy from a commodity, you create a security. That's just common sense, right? And if a small group of programmers can write a piece of software that makes all of the oil in Asia not burn, or makes all of the oranges in Florida not edible, that's a security. That's not a commodity. So if you could double the density of gold by writing a piece of software code, it wouldn't be a commodity anymore. It would be a security, right? So this is kind of common sense. I mean, you don't even need the law. You just kind of need to think common sense. If 5 programmers get to make all your food not edible, is the food a commodity anymore? And the answer is no, it's a coupon or it's a security. So in this particular case, Gensler actually said when he was put in the SEC that staking tokens, if there's a stake and you generate yield, that's an investment contract. He said that a year ago. So I think he's become more forceful in his articulation in the aftermath of the crypto crash. And I think what he's saying is very straightforward. If you want to create a commodity, it has to be without an issuer. It has to flunk the Howey test. And if you've got an issuer, if you've got a small group of people, if they have control over the protocol, then it's probably a security for common sense reasons. I think that the regulators will move forward on this. There'll be some back and forth. There's going to be political debate. Most of the crypto industry has a vested interest in keeping ambiguity, right? Keeping this ambiguous, right? And so most of them, they'll say, well, we haven't gotten clear guidance. Well, there is clear guidance. You know, if you've got a company and you issue equity in the form of a token, it's a security. There's clear guidance, right? If you created a company and you gave yourself the stock and then you sold stock to investors and then you sold the general public and then you keep changing the code that controls what you can do with the stock, it's a security. So I think what Gensler said is just because you don't like the guidance doesn't mean you don't have it, right? To that point, I think that we're going to actually see the industry mature. I think it's getting harder and harder to feign ignorance and for people to be oblivious to these material differences. I think that there are some crypto organizations that are lobbying both sides of the fence, right? And I think that's frustrating. But I also think there are some Bitcoin only organizations that are doing a good job of articulating the ethical benefits of proof of work. I do support some of them, and other people that I know support some of them. And I would encourage anybody to support the Bitcoin only organizations because they don't have a conflict of interest. I think, to the point, if we start from basic principles, we wanted a treasury reserve asset and we wanted a digital gold or a digital commodity without an issuer that could be global and neutral. And so we looked at all of the thousands and thousands of cryptos and we concluded it needed to be a proof of work type asset. And we looked at every proof of work asset and Bitcoin was the dominant, and it was the one with the best monetary policy, with the clearest ideology. And then we asked the question, well, will it be banned? Will it be copied? Will it be hacked? It hadn't been hacked for a decade, so I figured that was good. Will it be banned? No, it was anointed as property by the IRS and as a commodity, and we knew it was a commodity. And I think those facts have only improved. I think it's pretty clear there's support in the Senate and Congress and the SEC and the CFTC all through the world, even across many governments, for Bitcoin as a digital commodity. There are a lot of regulators that have concerns about when you use it as a currency because they see it might be threatening to their local currencies. Look, every country in the world has capital controls. You can't just move capital out of China. You can't move capital out of Argentina. You can't move capital out of Lebanon or Turkey. So when it's used as currency, you get a lot of capital control issues or KYC issues or the like, AML issues. But as property, it's not controversial. And it looks like even as cross-border payments, it's not going to be. A lot of people are going to allow you to do cross-border payments. So I think that in the dimension of will it be banned? No, it's going the opposite direction. It's not being banned. And now we're back to this issue of will it be copied? It got copied thousands of times, but most of the times the copies were imperfect because the people that copied it didn't understand the engineering elegance. It's like copying the wheel but making it an octagon, or making it a rectangle or something. It's like they copied it wrong. It actually was extremely elegant, because the goal of Bitcoin was to be able to support hundreds of trillions of dollars on the base layer and let you build other layers like Lightning and applications on top of it and serve as the foundation. So they copied it wrong for the most part. When you put all the other Turing complete functionality into the other copies, they made a mistake. What they should have done is just copied it right. But of course, you can't really copy the Immaculate Conception. And everybody that copied it wanted to make money. And the point is, if you really wanted to copy it, you need to create something more elegant, and you need to not have any economic interest in it, and you need to give it as a gift to the world, and you can't actually make money off it, and you need to disappear. So that's the way to copy it. I think that the irony right now, and I'll finish my comment, is people are very busy uncopying it. Right? Bitcoin was maybe 75% of proof of work networks before the merge, and now it's 95%. So in fact, it's been uncopied because people, I used to joke, right? If you have a brilliant engineering insight, your competitor may in fact look at it and say, why would I want to do that thing? And so Bitcoin is so brilliant that many of the competitors, they're blinded by their own personal self-interest and their own egos. And so rather than appreciate the brilliance of it, they don't actually appreciate the fact that the whole point was to avoid having a company or avoid having a counterparty or avoid having a set of programmers. Some people think I have to keep changing the code. I have to keep upgrading the software. The brilliance is not changing the software, right? What they don't realize is to be a commodity, you can't keep changing it. But if you're a software engineer, you want to keep changing stuff. So half of the crypto world wants to keep changing the code. And what they don't realize is if you can change the code of Bitcoin, you probably made it a security, not a commodity. And if you remove the energy from Bitcoin, you probably made it a security, not a commodity. So the idea that a bunch of smart engineers are going to add a bunch of functionality, change it every year, and suck the energy out of it is converting a digital commodity into a digital security. They just don't have enough grounding in all of the various disciplines to realize how horrific a mistake that is.
This does perfectly lead me to my next question. So Bitcoin author Dagigi, he had a great thread a couple of years ago, a failure to understand proof of work is a failure to understand Bitcoin. With regards to proof of work, the propaganda in the mainstream media right now against it is relentless. It's absolutely everywhere. Around the Ethereum merge, Greenpeace is tweeting at the Bitcoin CEO 24/7, trying to quote-unquote change the code. Why is it? And who is working so hard against proof of work? And why is it that it seems that many people just don't want to understand that it actually can help in many relations? And maybe the second question, what's the situation of Bitcoin mining in the US right now? What developments do you see?
As I get older, I'm more of the opinion that many of these 501c3s, many of these nonprofit charity organizations, they start out with a good idea and then they run out of money. And so then they go look around for someone to give them money. And so I think like 40 or 50 years ago, someone gave money to a Greenpeace type organization to lobby against nuclear power. And probably it was the oil and gas industry that gave a lot of money to these charities to lobby against nuclear power, to shut down the nuclear power industry. And then ironically, another 30 or 40 years, the solar and the wind lobby gives money to them to lobby against the oil and gas industry. And then when they run out of that, other crypto promoters are giving money to these environmental lobbyists. They're just giving them huge amounts of money to lobby against Bitcoin. It's like that. It's not really bona fide environmental interest. If you're an environmentalist, you would be focused upon saving the trees or saving the seals or doing something in order to cultivate parks and the like, but 99.92% of all the carbon comes from something other than energy that fuels proof of work. So I actually think it's the other crypto promoters that are generating all of the attack points. They're generating all the propaganda. They're feeding it. They're funneling it through academics. They're funneling it through politicians. They're funneling it through 501c3s and through environmental activists. And so you have to just follow the money. And they're funneling it through their lobbyists. And I think their agenda is they're all promoting unregistered securities. So all of these other cryptos are for the most part unregistered securities. And so you have to have a justification for promoting a crypto token that doesn't use energy. Well, if you understood securities law and if you thought about physics, you would realize that when you slurp the energy out of the commodity, it becomes a security. And when you convert the security to be programmatic, when you create a virtual world, a virtual energy, and use virtual machines to create virtual security, to create a virtual token, you've got a software company, and that's equity in the software company, and you've created a security, which you're then selling to the general public. And if you're going to sell equity to the general public, you need to do it pursuant to fair and full disclosure that's ongoing every quarter, every year, continuous, because the general public deserves to know who's going to actually change the definition of the token, right? Who's running the company. And so I think that you have an entire crypto industry and a lot of crypto promoters that they've got this kind of existential problem, and there's no way to defend it. I mean, there really is no defense to creating a token, giving it to yourself, selling it to the general public, and not disclosing. And so the best way to deal with it is change the subject. So we change the subject to energy usage is bad. And the reason that you should let us exist and the reason you buy our token is because Bitcoin is bad for the environment, right? Well, it's bad for the environment in the same way that oranges and meat and buildings and cars are bad for the environment. They all use energy. In fact, hospitals use energy, right? So if I went to you and I said, I'm going to eliminate your hospital and I'm going to replace it with a virtual imaginary hospital that's going to actually lower the cost of healthcare, and I'm going to fix your avatar up whenever your avatar has an imaginary heart attack, I'll give you imaginary surgery and I'll make you imaginary healthy, and you could pay me in imaginary coins, and then you'll go home imaginary happy, right? I mean, sure, you could do it, but it's ridiculous. It's like meta money for the metaverse with meta energy.
So maybe give us, for the last question, give us your outlook. How is this going to end? Are the other cryptos just going to be ruled securities and just going to basically disappear, and then people will flock into Bitcoin? Is this going to hit Bitcoin maybe? What if the lobbyists are successful and Ethereum becomes a digital commodity, quote unquote? Bitcoin is also being used now on the state level, or at least we see rumors about this. What are you seeing? Where are we going in the next couple of years?
I think that the market is going to become more and more educated, and as the market gets more educated, it's going to see the virtues of Bitcoin as the dominant digital commodity, and Bitcoin's going to get stronger. I think that that regulators, as they focus on this, the more when you focus on it and you bring a lot of attention to bear, I think they're going to realize that they need to segment the market into digital currencies, digital securities, digital commodities, and they're going to set precedents by their rulings where it's going to become more clear. It's already becoming clear to institutional investors. And you can see, for example, you're reading about the comments of the chair of the SEC in the Wall Street Journal on the front page, and you're reading about it in Bloomberg. If you roll the clock back 2 years, I don't think Bloomberg and the Wall Street Journal really understood the difference between 10,000 crypto tokens. But I think today it's becoming critical for multi-billion-dollar investors and big banks and big regulators and politicians to understand the difference between a US dollar stable coin and a crypto property in the form of a Bitcoin and a crypto token that's a security. And they, there will be a lot of sound and fury for the next couple of years while we sort it out. But I have confidence that the world will eventually sort it out because there are physics involved here and there's a lot of rationale involved here. So I think the first stage is sorting out the crypto segmentation and people realizing the difference between a crypto commodity, a cryptocurrency, a crypto security, and a crypto exchange. And they're going to get regulated, and 80 to 90% of the capital is going to sit in the regulated world, and then there'll be a gray market that'll fester on for a while, and that'll continue. The second stage, right? I mean, if you think about it, first people need to understand why Bitcoin is a superior crypto asset to every other crypto asset for a long-term store of value or for sovereignty. That was the first thing MicroStrategy went through. The second thing they need to understand is, why is Bitcoin superior to gold as a bearer instrument or a commodity or precious metal store of asset value? And so that's going to be the second stage. And the third stage is, why is Bitcoin as crypto property superior to other forms of property? Right? The crypto world has about $1 trillion worth of money floating around, and we're trying to sort out which is the superior crypto asset, right? And for what? And the truth is, I really believe the killer application is a Lightning wallet on 8 billion smartphones that has US dollars as a short-term medium exchange and payment network, and BTC as a store of value. And it runs on Lightning, and then it is secured by the underlying Bitcoin base layer. That is going to be the voice over IP moment, or the web, the Netscape moment, when you actually have the ability to download a Lightning wallet in 30 seconds and trade US dollars with all 8 billion people on the planet friction-free. When that happens, that'll go viral, and hundreds of millions of people will first grab that in the first year, and then billions of people will grab that. So I think that technology is going to play a role here in spreading things, if you look at that. But from the investor point of view, there's $1 trillion that's being argued over in the crypto world. There's $10 trillion in the precious metals world of gold. There's more than $100 trillion of property. And then, of course, ultimately, there's $500 trillion of other assets. And so what we're going to go through is just a very intense education process. And there's going to be a lot of fighting because there's a lot of money at stake. Right? And if you have that much money at stake, no one's going to go easily, and there's going to be lots of lobbying and lots of positioning. But ultimately, the market will decide, and the thing that will cause Bitcoin to win is that everyone that understands proof of work is going to realize that Bitcoin is the best proof of work network, and that's why it's 95%. And then people that buy into proof of stake, they're going to be in a war to keep upgrading their proof of stake cryptos, and they'll keep hard forking and hard forking and hard forking. And ultimately, the competition between all of the various proof of stake networks over who's got the most functionality and who's got the most performance will devolve into a technology competition of software companies. And they will be recognized as software companies, and eventually they'll have to register as software companies, and they will centralize, and they will deal with all the challenges of software companies. They'll have compliance issues. There'll be certain things they can do or they can't do. And the typical investor that wants to invest in a software company will sift between the various ones. But someone that wants to store their value for 100 years is not going to trust a software company, and a government is not going to, they're not going to actually invest their sovereign treasury in a software company stock. There's no way that a government, the United States is not going to trust a Chinese software company. China is not going to trust an American software company. And so ultimately we'll get back to first principles, which is you're going to create something that when 1 billion people run a node, right? A node, right, is in essence self-sovereignty. When 1 billion people run a node and Bitcoin miners are running in every country on earth and no one can put their finger on the network, and nobody, you know, the difference between me and some of these other advocates is I am quite sure I am not responsible for Bitcoin being as good as it is, and I'm sure that I can't change it. And if I disappear tomorrow, it won't make a difference. And I have enough life experience to realize that it doesn't need fixing, right? When 1 billion people are running a decentralized node, no one's going to be able to change it. It is truly a digital commodity, which makes it a basis of sovereignty and freedom and property rights for the human race for the next 1,000 years, if not 10,000 years. We might actually trace the singularity to January 3rd, 2009, when humanity finally had property rights that could not be seized. And before 2009, we were living with imperfect property rights and defective money. And after 2009, we had property rights and we had energy flowing into the digital realm. And that might change humanity for thousands and thousands of years. So I'm confident and optimistic that it's a pretty important thing. And I don't think, I met lots of people. I have confidence that other objective people, you know, neutral observers, they will come to the same conclusion. The disinterested parties will come to the same conclusion. And as they come to that conclusion, the market will segment and things will sort themselves out in a rational fashion for the good of humanity.
Michael, thank you so much. There's nothing much I can add to a sentence that ends with "for the good of humanity." You said it's going to be a wild ride. We are all going to be here for the wild ride. I'd love to already invite you for the BTC 23 next year. Maybe you can make it, or we chat again. Thank you for taking the time. All the best.
I will look forward to it. Thank you. Thank you, Innsbruck. And thank you, everyone that supports Bitcoin. Keep up the good work.